Friends, the topic, the latest and the relevant may not be the latest, but then not very old decisions, but which has got relevance of practical importance to most of us. Friends, the first decision which I would pick up from the Delhi High Court in the case of Schneider Electric Southeast Asia Private Limited. This is dated 28th March 2022, and it has not been reported in the journal, but then the way the information blast is there, it is there at the click of the mouse. Friends, this decision is on section 270AA, particularly subsection 4. You may be aware that Finance Act 2016 now brought the wholesale chain in the scheme of penalty under the Income Tax Act. In place of section 270(11)(c), penalty provisions under section 270 capital A was brought on the statute from assessment year 2017-18, according to which an assessee was liable to be penalized for the underreporting of income in respect of the underreported income in place of the erstwhile charges under the erstwhile section under section 270(11)(c), which used to be concealment of particulars of income and furnishing inaccurate particulars of income. Subsection 3 of section 270 capital A now prescribes as to what is the underreported income. Then the penalty which has been prescribed under this section in respect of the underreported income simpliciter is 50% of the tax payable on the underreported income. And in case this underreported income is in consequence to misreporting of income, then the penalty is 200% of the tax payable on such underreported income in consequence to misreporting of income. Now, an income can be said to be underreported income in consequence to misreporting of income in 6 instances, in 6 situations which are given under subsection 9 of section 270 capital A. For example, suppression of receipts, claiming fictitious expenses, suppression of facts, so on and so forth. And these are exhaustive 6 situations which have been enlisted in the subsection 9 of section 270 capital A. But with the advent of this penalty provision under section 270 capital A came a very novel idea or a novel provision in the form of section 270AA, in the form of claiming the immunity from the levy of penalty and from prosecution. And that provision is contained under section 270AA, according to which if an assessee does not appeal against the additions or the disalliances made in the assessment order and chooses to pay the tax within 30 days from the date of the service of the demand notice, then may apply seeking the immunity from the levy of penalty under section 270 capital A and prosecution under section 276C and CC. But the condition is that he should not file appeal, and penalty should be for underreporting of income simpliciter. It should not be in respect of the misreporting of income, because if the penalty has been initiated in the assessment order for misreporting of income, then such person would not be eligible to file application seeking the immunity from the levy of penalty and seeking immunity from prosecution. Now, Schneider opted for immunity under section 270 AA by filing the declaration in the prescribed form within the prescribed period, by choosing not to file appeal, paying the taxes in time, but then the assessing officer slept over, because under subsection 4 he is required to dispose of this petition within 30 days from the end of the month in which it is filed. But then the assessing officer slept over the application filed by the assessee seeking this immunity and passed an order rejecting the grant of immunity after a couple of years. Now, against this rejection, assessee Snyder Electric now filed writ before the Delhi High Court and raised several legal, jurisdictional and the limitation issues. One of the limitation issue, or one of the issues relating to limitation which was raised, was that this order which has been passed much beyond the prescribed period of 30 days, because the prescription of the time limit is given under subsection 4 of section 270 AA. Now this has been passed much beyond this time limit which has been envisaged under subsection 4 of section 270 AA. Court said, first of all, this order is barred by limitation. And then the court observed, and other court was persuaded to see that how could there be the rejection of this application when there is not even a whisper or iota of the charge of misreporting of income, either in the assessment order or otherwise. Court found that the assessment has been made based upon the disclosures made by the assessee in its return of income, and there was no case whatsoever as to the misreporting of income. Therefore, the court held in this decision, which is very important, because I have been experiencing that wherever applications have been filed by the assessees seeking immunity under this section, no order is being passed, or if at all it is being passed, it is being passed after considerable delay. Therefore, Honorable High Court in this decision first of all held that the order passed beyond this prescribed period of 30 days as envisaged under subsection 4 of section 270 AA now will be barred by limitations, and in any case, in the absence of any misreporting of income, in absence of even a whisper or an iota of these allegations either in the assessment order or in this order which has been so passed that there was misreporting of income, the rejection of the application filed by the assessee under subsection 1 of section 270 AA, now courts have said that it has to be set aside, and the courts set aside. So this is probably the first decision in respect of the immunity applications, and therefore it will give a long way in determining the rights and obligations of the tax department and the tax assessees in this regard. The next decision.
Sir, if there are any questions of the participants.
Okay, yes, please.
Yeah, Prakash ji, you want to say something? Prakash ji? Okay, he had raised their hand, but now he has lowered the hand. Any participant, after each judgment, you can ask if any question is there. Okay, sir. You can move to second.
All right, sir. Now, sir, the next decision which I'd like to discuss now is the Supreme Court's decision in the case of Messrs. Apex Laboratories Private Limited. This is against the decision of the Bombay High Court, whereby the claim of Apex Laboratories was discarded or denied by Honorable Bombay High Court. But then what was the claim? The claim was the expenditure incurred by the Apex Laboratories while granting freebies the hospitalities, the gifts, and various other incentives to the medical practitioners. And the question arose as to whether this expenditure which has been so incurred by Apex Laboratories can be said to have been incurred for wholly and exclusively for the purpose of business. Now, if we see on standalone basis, without referring to section 37 explanation 1, then one may probably be persuaded to say that yes, this expenditure in case of a pharmaceutical company can be said to be incurred wholly and exclusively for the purpose of the business. But explanation 1 to section 37 now came in the way. If you remember, by Finance Act 1998, explanation was inserted under section 37 with a retrospective effect, and that retrospection was right from the day when the Income Tax Act itself was born. And that explanation was that for the removal of doubts, it was clarified that an expenditure which is incurred for a purpose, which is an offense or which is prohibited by law, would not be allowed or cannot be said to be incurred wholly and exclusively for the purpose of the business. Therefore, in the light of this explanation, the question which engaged the attention of the courts at various stages was whether the expenditure of this nature incurred by Apex Laboratories as a pharmaceutical company on the medical practitioners now can be said to be an expenditure for a purpose which is an offense or which is prohibited by law, and therefore cannot be said, or whether can be said to have been incurred wholly and exclusively for the purpose of the business. If you remember, that finance bill, now it has become an act. Finance Act 2022 has inserted explanation 3. But then that was not taken note of by Honorable Supreme Court. And Supreme Court confined itself to explanation 1 to section 37. The case of the SSE was that it may be prohibited by law for the medical practitioners to have the benefit of these freebies under the Medical Council Act or under the regulations made under that act, but that prohibition does not extend to the giver, to the pharmaceutical company. And therefore, explanation 1, this was the case of the SSE consistently. Therefore, explanation 1, even if it seeks to stare at the face of the taxpayers, but then cannot be pressed against the pharmaceutical company or particularly the SSE. Now, this argument did not find favor now from the apex court, though amendment has also simultaneously been made, unmindful of this decision which was to come by the Finance Act 2022 in the form of explanation 3. But then even dehouse that explanation or dehouse that amendment. Honorable Supreme Court, my Lord Justice Bhatt, speaking for the court, now has held that if it is prohibited by law for the medical practitioners, then to take the narrow interpretations that it cannot be said to be prohibited on the part of the giver. Now the courts have said would tantamount to taking a very parochial, very narrow, very contrite, very restricted view. Honorable Supreme Court pressed even those decisions which were given in the realm of the Prevention of Corruption Act, that a person who takes the bribe now commits an offense, and the person who gives the bribe now is also committing an offense. So Honorable Court went to the extent of drawing parity by citing such decisions which were given in the context of the criminal jurisprudence. But of course, Honorable Court said that giving these freebies cannot be said to be an offense, but then certainly it is prohibited by law. It was argued on behalf of the taxpayer that in 1998, when this explanation was brought, the memorandum specifically referred about the protection money, hafta, and therefore the insertion of explanation 1, it was urged on behalf of the taxpayer, ought to be seen in the light of the background, in the light of the purpose which was coming out from the memorandum. Now this argument also did not cut ice with their lordships. They said that that was by way of an illustration, and therefore to say that explanation 1 should be read only in the context of that memorandum, now again will be deemed to be giving a very restrictive meaning. So explanation 1 was interpreted by, now one argument was also addressed on behalf of the taxpayer by citing the Supreme Court's decision in T.A. Qureshi, that in T.A. Qureshi, a person was doing the smuggling and the smuggled goods were forfeited, confiscated, and there was a loss which was sought to be claimed in that case. Now the department sought to impress upon their lordship, the Supreme Court, that it should not be allowed, because to do smuggling is something which is opposed to public policy and which is an immoral act or which is an illegal act. But in that decision, the court said that income tax is not concerned with the legality or illegality, and the income even from the illegal business is liable to be assessed, and if there are expenses or losses incurred while carrying out such illegal business, that should be allowed, and therefore the loss on account of the confiscation of the smuggled goods was held to be allowable. Now this decision has been distinguished by the courts on the ground that that was in connection with the trading loss, whereas here the case is that of an expenditure, and expenditure which is prohibited by law is specifically denied under explanation 1 to section 37. Then Supreme Court has taken note of the decision of Mumbai bench in the case of PHL Pharma Private Limited and the Delhi High Court in Max Hospitals Limited, in which it was held, the Delhi High Court, it was held that if the freebies are distributed by the pharmaceuticals companies, now it cannot be said to be prohibited, or it cannot be said to be covered under the Medical Councils Act read with its regulations. But then Honorable Supreme Court, despite these decisions coming from High Court, now was not impressed upon the interpretations sought to be placed on behalf of the taxpayer, that is the Apex Laboratories, and held in a very categorical manner that when one limb of the transaction is prohibited by law, then not to treat the other limb as prohibited by law now would be against the well established canons of taxation, and therefore Honorable Court held that these freebies or the expenditure incurred by pharmaceuticals company cannot be allowed as an expenditure because these are prohibited by law. Therefore, Supreme Court has set at rest that controversy, and now in any case explanation 3 to section 37 has been introduced by the Finance Act 2022, is specifically providing specifically providing that it will not be allowable. So if on this case, if there are questions, Sharma Sahab.
Yes, sir.
There is one of my friends, Mr. Prakash Sinha. I had just seen message that he can't speak because he is not in the panel. So if you can help my learned friend, Mr. Prakash Sinha, to join.
Yeah. Deepesh,
Yes,
can
I
you
will.
unmute
Yes,
him?
yes, I will do that.
Sir, before he joins, see, this amendment is prospective. And I think this judgment has come after the finance bill was presented.
Yes.
And therefore, the Supreme Court has not taken the note.
No, Supreme Court has not adverted to, nor was probably referred, because I could not find the reference of the amendment. But then to say that amendment made by Finance Act 2022 is prospective, that itself is highly debatable, because the way, maybe in memorandum it has been said that it will come into effect from a particular date.
Yeah.
But then the way this explanation was worded, for the removal of doubts, it is hereby clarified that expenditure incurred for a purpose which is prohibited by law shall be deemed and shall always to have been deemed, like these phraseology used by the legislature when come up for interpretation before the court, then the courts may well tend to ignore the explicit date with which a particular provision comes into effect, and can say that it is clarificatory.
Sir, similar wording was there and for amendment in 36(1)(5).
Yes.
Similar wording was there. But
Yes.
then there are tribunals are taking the view that it is prospective.
Yes, that is one view. Tribunal is not the final.
I know.
So therefore, we cannot say since the tribunal has interpreted in the context of section 36(1)(5)(a), I mean that amendment is prospective. Therefore, I mean all such phraseology will always be interpreted by all courts in times to come as prospective. I have got my own reservations.
Right, sir. But then, sir, in the Supreme Court judgment, they have said because of that circular, so because of the Supreme Court judgment, even if that amendment is prospective, it will apply to the old past cases also.
Yes, yes. Because the law explained by the Supreme Court operates as if the law was always like this.
Always, correct, sir.
Yes.
Sir, in the first case you said,
Yes.
this nothing was mentioned about the misreporting.
Yes.
But then, like 271C, there are number of judgments like if that the sentence is not that half, it is not fully cut, means where the charge is not specific. That Mohammad Farhan Bombay High Court judgment and various other judgments are there, which are said if the charge is not specific and if the penalty notice doesn't specify, that ratio will apply in these cases also, sir. Either whether it is
in fact, Sharma Sahab, I remember when the pandemic began, then this I and Somil happened to write for an article which was widely published on section 270(A).
Yes, sir.
And on the first principles of law, we analyzed and then we found that this which charge would be applicable was creating problem in the matter of the levy of penalty under section 270(1)(c).
Yeah.
And the new section 270(A) was very cleverly crafted and drafted in such a manner that this distinction gets blurred. Because if you see subsection 1 of section 270(A), it speaks only underreported income.
Yeah.
If you see the meaning of underreported income as explained in subsection 3, it speaks of underreported income. Now, if you see subsection 6, which says that if you are able to explain it, then it will not be underreported. So, till subsection 7, it speaks of only underreported income. Now, even in subsection 9, the legislature very cleverly, consciously used a very peculiar expression. That expression is underreported income in consequence to misreporting of income.
Yeah.
So, legislature has not used these two terms independently, as it used in the context of section 271(1)(c), concealment of particulars of income or furnishing of inaccurate particulars of income. Legislature consciously used only one phrase, underreported income. Underreported income in consequence to misreporting of income, meaning thereby the legislature always wanted to treat every difference between the returned income and the assessed income as underreported income, and thereafter then in consequence to misreporting or otherwise.
Okay.
Now, our jurisprudence is so much overawed by those decisions which have been rendered in the context of section 271(1)(c), which envisaged two independent charges or two, whether they were mutually exclusive or not, that could be debated. So even that jurisprudence is flown here also.
Okay.
But then legislature purposely, consciously, deliberately used only one expression, and when they wanted to use misreporting, they have been very clever in saying underreported income in consequence to misreporting of income.
Okay. Okay. Prakash ji, you are there?
Yes, sir. Am I audible, sir?
Yes, very much audible, Prakash.
Oh, thank you, sir. First of all, good afternoon, sir. Good evening to all my seniors, sir. Rakesh, sir, Ashok Sharma, sir. I was going through the judgment, sir, in the case of the pharmaceutical industry.
Yes.
And my question was that this judgment is divorced considering the explanation 3.
Yes, yes, yes.
Therefore, the explanation 3, it seems that which was mentioned that it was a prospective in nature, does not remain so.
Prakash, I think you were there when I said, even if that amendment has been said to be prospective in the memorandum, but the way it has been worded, it was worded, I had got very little doubt that if the department had persisted with the courts to give that explanation 3 to have retrospective effect in the light of the manner and the way, the tone and texture of that explanation, then it probably could have been read by the courts to have come into retrospective effect. So that was my view, which I echoed at various forums whenever I delivered my lectures on finance bill. So Parliament may say that a particular provision will come into effect from a particular date, and that is usually honored. But then, having regard to its curative nature, having regards to that mischief rule, now it may be interpreted by the courts, and of course it may be interpreted by the courts. If you remember, in that 43B matter, what was the name of that? It started with long back, that those provisos which were added in section 43B were held to be, curative in nature. So courts can always hold that even if the Parliament has said that a particular provision will come into effect, but then having regard to the purpose, the texture, the text, the purport, the courts can always say, yes, in the matter of the substantive law, the generally accepted interpretation of law is that it will come into effect from a prospective effect.
Thank you, sir.
Yes, sir.
Yes. Yes. Now the third decision which I will take, though Ashok Sharma Sahab has said that they have already discussed in their study circles meeting, but then certain interesting things I like to, you may have discussed this decision, but then I will try to extrapolate the things and then maybe some new insights may come. That is Maria Fernandez Cheryl versus ITO Mumbai bench decision, and this is 15th of January 2021, and it is reported in 187 ITD 738. And this decision says that the proviso, particularly the third proviso, which gives the bandwidth of 10%. Now that, even if that bandwidth has been given by the legislature to be coming into effect from 1/4/2019, but then it was curative. It was in order to prevent the mischief which was never intended, and therefore that should be treated to have come into effect retrospective right from the date when section 50C was enacted. But then, have you ever analyzed the provisos of section 50C. As all of us know, that section 50C speaks or provides for that in case there is a transfer of capital asset being land, building or both for a consideration which is less than the stamp duty value, then the stamp duty value shall be deemed to be the full value of consideration in respect of the transfer of that capital asset. Then came the proviso. First proviso says, and it was brought by Finance Act 2016. The first proviso says that when the stamp duty value as on the date of agreement and the date of transfer is not the same, then the stamp duty value as on the date of agreement can be adopted. And second proviso says, provided that a part of the considerations pursuant to that agreement has been paid through the banking channel. And the objective was that there is always a time lag between the date of agreement and the date of transfer. And in case of the builder flats, I mean, there is a time lag is quite considerable where the stamp duty value, may shoot, and therefore a seller should not be put to a highly disadvantageous position, and therefore this first proviso was carved out. But at the same time, the legislature did seek to ensure that this provision or this proviso should not be misused by antedating the documents or by antedating the agreements, and thereby providing that a part of the consideration, howsoever small that part may be, if paid through the banking channel, meaning thereby that will ensure that the agreement is not antedated. Now, there are a couple of issues emanating and oozing out of it, though I'm conscious that I was discussing Maria Fernandez, but then kindly see, even those provisos also, I mean, first and second proviso have also been held to have a retrospective effect. But then one question which always I ask to myself in respect of that agreement, that if that agreement is the registered agreement, first of all, that agreement may not be the registered agreement. Now somebody can say that Balveer Singh Mani Supreme Court has said that agreement, if it doesn't or if it is not registered, then cannot be set. But then that agreement is in context of the transfer. Actual, when can the transfer, said to be taking place, that decision was there. But here the agreement may even be an unregistered agreement. That is what our interpretation in our book also. And the requirement is that the part of the consideration pursuant to that agreement may have passed through the banking channel. Now kindly see the second variation. Now suppose no amount has passed through the banking channel, but then the agreement itself is the registered agreement. So the purport and object of bringing this first proviso, now it stands met in case, because if an agreement is registered agreement, then of course there is no chance of any antedating, and therefore even if pursuant to such a registered agreement, if some consideration has not passed through the banking channel, why should the seller, or for that matter even the purchaser under section 56, be made to pay tax with reference to the stamp duty value as on the date of actual transfer? Then the third variation, kindly see. No, there is no write up. I speak just like that. I have noted down. I have noted down the case laws. That is how. That's all. Now kindly see the next variation. I always say that if the agreement is registered and on the date of agreement the payment has not been made, but the payment through the banking channel has been made the next week following, merely because there was a delay of 1 day or 2 days or 3 days. Now whether a person should be deprived of the benefit of the stamp duty value as on the date of agreement merely because there is 1 day's delay or 2 days delay from the date of agreement, registered agreement. Now legislature obviously cannot comprehend all situations, but then since section 50C creates a deeming fiction in favor of revenue against the SSE, And these provisos have been inserted to take care of the practical situations. Therefore, though there are no judicial decisions so far, but I think that on the lines of Maria Fernandez Cheryl, now these variations also may come up for interpretation before the court, where the courts can mold the relief even by disregarding the strict rule of letter of law, and then by going the purport and object of the insertion of these provisos. Therefore, I have touched this case law in order to trigger this kind of a debate. I remember that we have covered this topic on section 50C and section 56 to 10 in respect of the immovable property in our book on real estate. And there we have me and my partner Dr. Raj, when there we have taken out several permutations and combinations and have asked certain questions as to what would happen with the slight variations in the facts. So to that extent, I just wanted to otherwise the rule of Hayden's mischief rule, if you remember, that a provision which is curative in nature, a provision which is inserted to prevent a mischief, and that mischief was never intended in the first place. Now the courts have said that even if the parliament says that this amendment or this curative amendment would come into effect from a prospective date, the courts have said that our hands are not tied. Now we will go by applying the rule of Hayden's mischief rule, and then we'll read it as if this curative amendment was also there right from the day when that section itself has come into existence. So this and that is why when Sharma Sahab said in the context of section 36(1)(5)(a) that the language of the section, or for that matter the memorandum or the Finance Act 2020 or 21, whatever is there, said that it will come into effect from a prospective date. But then that itself was a highly debatable question. And if you remember, in one decision, the Delhi bench of the tribunal held that amendment as retrospective. But then that order was recalled in miscellaneous petition, and then the whole bunch of cases were listed before the benches. And tribunals so far are taking this view that this amendment made by the Finance Act 2020 or 21 in section 36(1)(5)(a) now is prospective. But then, since, as I said, even at the cost of repetition, I would say is not the final word. It has come from the tribunal. The orders of the tribunals now susceptible to be examined before the High Court, and there is definitely a substantial question of law. And let us keep our fingers crossed what happens. Sir,
True, sir. You rightly said you will take some issues out of that. This registered agreement,
yes.
this nobody has. We never discussed that. If the agreement is registered, we never. This is a new thing for us. And it is like,
because we always say,
yeah, you have to see the object of the law.
Yes, because mischief, I mean, the object was to prevent mischief.
Correct.
So if the mischief is avoided by getting the agreement registered, then how does it matter whether 500 rupees is paid out of the total consideration maybe of 500 crores through the banking channel or not? Because that antedating now is secured and prevented.
Right, sir.
Okay. Any other observation or question with respect to this aspect or this facet? Prakash?
No, sir. Right now, not, sir.
Okay. Thank you. Should I proceed, sir?
Yes, sir.
Okay. The next decision that I'd like to take is the Supreme Court decision in the case of Pepsi Foods Limited. It is 6th of April 2021, and it is reported in 111 CC Act. I have not found its reporting in any, because that may be the reason. There may be the reason for its not being reported under the other journals is that this decision is the briefest possible decision. But then nonetheless, sir, would you please, Devidas sir, I am giving lectures. I would call you later on. It's so nice. Thank you. Yes. Now, Pepsi Foods decision was given originally by the Delhi High Court. Now the department filed specially petitions to Supreme Court, and that specially petitions, the leave was granted, and when the leave was granted, then it became the civil appeals, and then that civil appeals were dismissed by Honorable Supreme Court, maybe by passing a non-speaking order. But then, even if that order which was passed was non-speaking, even that order was non-speaking, but then the fact that non-speaking order came to be passed in the civil appeal, then by virtue of the doctrine of merger, the High Court's order gets merged into the order of the Supreme Court, and that becomes the order of the Supreme Court. Now, that is a settled position of law, if you remember, in Kunai meets 245 ITR. And there may be other decisions also in earlier days, but then I do recollect. So Pepsi Food, the issue arose as to the provisos which was added under which were added under section 254 subsection 2 capital A. Subsection 2 capital A. Sir, please hold on, sir. Please hold on. Now, Honorable Delhi High Court said that the provisos inserted to section 254 2A to say that even if the delay is not attributable on the part of the SSE, then even in that situation, the stay beyond 365 days shall stand vacated, is arbitrary, capricious, is irrational, and thereby offending Article 14 of the Constitution. Honorable High Court said, now which has become now part of the Supreme Court's because of the doctrine of merger or the order of the Supreme Court. High Court read down that provisos by saying that it does not make distinction between the recalcitrant SSEs and those SSEs who are industrious and joining the proceedings. And then if the delay is attributable on the part of the revenue and yet the provisions say that the stay will stand vacated, now is something which is arbitrary and irrational. And therefore, this proviso, in Bombay you have got Narang Overseas, and Honorable Delhi High Court took note of the Narang Overseas, I mean for that matter, and therefore this Pepsi Food holding that third proviso to section 254 2A without making a distinction between an SSE who is compliant SSE and SSE who is non-compliant SSE, now is something atrocious, arbitrary, irrational, illogical, and thereby offending the sensibilities of an Article 14 of the Constitution. So this decision is very important decision, and now I remember that many, I mean, there was a time when several decisions were pronounced by the Supreme Court by passing, with utmost respect and humility, I would say, by passing the laconic order, but not as a matter of the dismissal of the special petition, but then converting the special by granting the leave and then converting that special petition to civil appeal. And therefore, the question used to arise now whether such laconic, brief and non-speaking order after the dismissal of civil appeal can be said to be having the binding effect under Article 141 of the Constitution. So the law, I mean, in that regard is fairly settled that by virtue of the doctrine of merger in such situations, that will be taken as the order from the highest. So, Sharma Saab, now somebody wants to observe something or like to ask something.
Yeah. Friends, anybody has got? Otherwise, sir, we'll move to next question. Next case.
Sir,
Prakash, yes.
I can recall this in this case, there was a argument from the revenue side or SS side that unequals are being treated as equals.
Yeah. Only then Article 14 is pressed when such argument is raised, and not only is raised, is demonstrated.
Yeah.
Then only then Article 14 can be, I mean, invoked by the courts.
So I can just recall that part here. So I
yes,
just
yes.
that I thought that I will supplement that.
Yes. So should I proceed, Sharma Sahab?
Yes, sir. Yes, sir.
Okay. Now the next decision I will deal from the tribunal, but then it's very important decision, and it is coming from Patna bench of the Income Tax Appellate Tribunal, and the name of the decision is Shiv Bhagwan Gupta. It is reported in 211 TTJ. Now we have got such section 132 is there. Then in case of such, there is penalty for the specified previous year under section 271 AAB. In case there is undisclosed income relating to the specified year, specified previous year, then the penalty in certain situations are liable to be imposed under section 271 AAB. And even section 270(11)(c, now having been consigned into the dustbin of history and replaced by section 270(A), but then in case of such for a specified previous year, penalty now can be levied under section 271 AAB. But then there were two questions. One question was that since section 271 AAB uses the expression shall, now whether that penalty is mandatory. And the second was that when the income was offered by the SSE in his return of income, now whether penalty under section as undisclosed income, whether the penalty under section 271 AAB can be levied. Now insofar as the first question, whether these penalties are mandatory or not, of course the interpretation which has been followed by the tribunal was that this penalty is not mandatory, even if the legislature has used the expression shall, because the legislature first of all has said that the assessing officer or those authorities may impose penalty in case there is undisclosed income the specified previous year. Then in that situation the penalty shall be of this amount. So if the conditions envisaged under section 271 AAB are found, then the quantum of the penalty, there is no discretion in the matter of the quantum of penalty. But then whether the penalty, if at all, should be imposed or not, there is a discretion which is vested and which is clear from the expressions used by the legislature as may. Then the court said that in this section, section 274 has also been made part of section 271 AAB, meaning thereby that under section 274, subsection 1 says that no penalty shall be imposed unless the person has been heard or has been given a reasonable opportunity being heard. That means the explanation is liable to be tendered by that person. That explanation is liable to be considered by the assessing officer on objective considerations in judicious, effective, reasonable, conscientious manner, and then the view will be taken. That means that the penalty is not automatic, it's not mandatory, it is discretionary. But then of course, even if something is discretionary, it has to be exercised based upon justice, equity and good conscience. But then it is discretionary. The second very important interpretation now which was pressed by the bench was that these are the penalty provisions, that too the penalty as a result of search, and therefore they have to be construed very strictly. There is no scope for any ambivalence, and therefore it has to be seen whether the amount on which this penalty comes to be imposed, whether fits into section 271 AAB ingredients or not. So honorable bench noted that there is an expression undisclosed income, and that undisclosed income comes to be defined under the explanation to section 271 AAB, and it has been given, though a very broad, or it has been defined in a very broadly manner, but then it has been given in an exhaustive manner. So 271 AAB, if I read the explanation, now it says any income of a specified previous year represented either wholly or partly by any money, bullion, jewelry or other valuable article or thing, or any entry in the books of account or other documents or transactions found in the course of such, not recorded in the books, would constitute undisclosed income. So now this additional undisclosed income declared by an assessee in his return of income now can be said to be fit into this definition, because it is neither money, neither bullion, jewelry, other valuable article or thing, or any entry in the books of account found in the course of such. So unless that additional income which is being shown in the return of income has been found as a result of such or in the course of such, now it can be concealed income, it can be underreported income, which may be liable to be penalized under other sections of the Act, but certainly it cannot be said to be fit into the definition of undisclosed income given under section 271 AAB, and therefore merely because there was an undisclosed income does not ipso facto empower the assessing officer to impose penalty under section 271 AAB. There may well be the applicability of section 271(1)(c). There may well be the applicability of section 270 capital A, depending upon for which year this penalty has been initiated. But the fact of the matter is that it does not fit into the definition of undisclosed income, and therefore penalty under section 271 AAB cannot be imposed. I find at times my friends probably remain under this impression that once there is a search, then for the specified previous year, if any penalty can be imposed, that can only be under section 271 AAB. That is a misplaced and misconceived notion. Because if, suppose for example, if there are certain cash credits appearing in the books of account and nothing is found during the course of such which impinges or which trashes the veracity or the correctness or the genuineness of those credits, assessing officer during the course of assessment asks you to prove on the parameters of section 68, and then you are not able to fulfill. Now that may be an underreported income, that may be a concealed income, but that cannot be said to be undisclosed income. And therefore there may well be the possibility that in case of a specified previous year, in respect of certain portions of income which can be said to be undisclosed income, penalty under section 271 AAB can be initiated and imposed, and in respect of other portions of income which cannot be covered under section, which cannot be said to be undisclosed income, or which can be said to be concealed income or underreported income, there may well be the penalty under these sections 271(1)(c) or 270 capital A. So these two penalties are not mutually exclusive, at least in respect of the different types of income that has to be borne in mind. I am conscious that there are certain decisions from the tribunal now which say that in case of the specified previous year, the penalty can be imposed only under section 271 AAB. But with great respect and humility, I would say that that may not be the correct interpretations. Depending upon the nature of income, now which penalty can be initiated and ultimately imposed, now will have to be seen. So
But
this
generally, sir, the officer also will not initiate penalty under other section if it is.
So in that situation, an SSE, I mean, stands to gain. The ignorance of the departmental officers comes as a bliss for the taxpayers.
That's what I'm saying.
Yes. I remember when in our search book, when we dealt with the penalty aspect, we have given, me and Dr. Raj, we have given very thoughtful considerations. We have brought out several permutations and combinations in the matter of penalties. I mean, even certain facets, even we could not experience while practicing. But then when we closely read those sections and then found, oh, this can also happen, this can also happen, this can also happen.
Yeah, true.
Yes.
Sir, your book on the real estate is which edition, sir?
Now, 5th edition is coming very shortly, and that 8th edition is coming of such.
Okay.
It's published by Taxman. Okay. There is the 3rd book which is coming on black money law.
Okay.
Yes. Then the next decision, or somebody, Prakash, or some, I am naming Prakash because I know Prakash. Otherwise, I mean, if any of my friends, I mean, wants to discuss or observe, they are all welcome.
It was a wonderful deliberation, particularly on the penalty and particularly 271 AAB, sir.
Okay.
We have not considered that type of respect, particularly for this section here.
Okay.
This was a new dimension for me also, sir.
Yeah, I mean, in the beginning you were not there, Prakash ji. Ashok Sharma sir said that those who have not joined would miss. But then, in this age of webinar, nobody misses anything because it comes on air. It is there, and then anybody can see it or view it, listen it at one's own pleasure.
You're right. You're right, sir. You're right.
Yes.
Mahendra Bhai Sanghvi, you are there. He is our past president.
Okay, sir.
Do you have any question, Mahendra Bhai? Yeah, Mahendra Bhai, if you have, you can please.
I will unmute him.
Yeah. You have been. Hello, Mahendra Bhai.
Yeah. Good. I have been there. Hello, sir. I've been listening to you. I'm enjoying it. Thank you so much. And Sharmaji, thank you also so much. Well, no questions on this right now. Yeah.
Okay, sir. Thank you, sir. Thank you.
Yeah.
But think of question and participate in discussion. It creates.
Sure.
Yeah.
No, it's pleasure listening to Gupta sir and his views. Right. And he has chosen very good decisions also. Very helpful for our practical purpose.
Sharma Saab is prompting Sanghvi Saab to create obstacles and roadblocks for. Sir, the next decision which I would like to take is Delhi High Court. I have seen in ittatonline.org, you will find most of the decisions of the Bombay High Court because the seat of ittat.org now is in Bombay. Since our seat is in Delhi, therefore, I mean, we find the decisions coming from the Delhi High Court, I mean, more handy, not only handy, but useful also because in our jurisdiction, that has got the binding effect. So that is
but is there any site? Is there any site there also, sir, in Delhi?
No, there is no site.
No,
Bombay covers everything.
Yes, sir. Yes. Even your articles are also we read on that ITAT online.
ITAT online, I mean, now chhod diya hai maine because they do not publish, so I send whosoever publishes. They did not find words in my articles.
Right. No, not like that.
Sir, the next is Ananda Kumar Jain. Now it is reported in 432 ITR 384. these decisions may not be of very recent, but then I have purposely chosen some of them to discuss certain other issues which are important. Now, Anand Kumar Jain is the decision in which Honorable Delhi High Court now has held a couple of things. I mean, with utmost respect and humility, I as an author, I mean, may not have agreed, and in fact we have not agreed in our book. But then when as an advocate or as a chartered accountant they have to argue, then of course, I mean, we argue like this. I remember one day one CITDR got up and said, Dr. Rakesh Gupta as an advocate is arguing against the author Dr. Rakesh Gupta. So I mean, this kind of situation does happen. But anyway, Anand Kumar Jain, the Delhi High Court, it was a case of section 153A. The SSC was searched and there was search at some accommodation entry provider's place also. The accommodation entry provider's statement was recorded in his search, and since that statement was having bearing on the determination of the taxable income of Anand Kumar Jain, therefore that statement was used by the assessing officer in the statement in the assessment of Anand Kumar Jain framed under section 153A. Therefore, the couple of very important legal questions were raised, which were adverted to by the High Court, and the answers were given. The first question which was raised and raked up was whether this statement can be said to be having evidentiary value even if there is no corroborative material found. Let us forget for the time being that this was a statement of a third person. Now, whether this proposition, as Honorable Delhi High Court said, that if there is a statement under section 132(4) and if there is no corroborative material found, then it cannot be said to be having evidentiary value, whether can be said to be laying down a good law. I am conscious that several high courts, or if not by high court, but then several benches of the tribunal have said on number of occasions that unless there is some corroborative material found, now the statement doesn't have evidentiary value. Now, I, with utmost respect and humility, now beg to say that this argument may be tenable in case of the statement recorded during the course of survey, because that statement is not recorded on oath and there is no specific provision as to its evidentiary value in survey provisions. But then if we read section 132 subsection 4, then that section itself says that the statement would be recorded on oath and can be used as an evidence. Therefore, if that statement given under section 132(4) remains uncontroverted, then that statement would operate in my respectful submissions as an evidence against the person who has given that statement. Of course, that statement given by somebody may not constitute that much of evidence in case of a third person, but then to lay down such proposition in such blanket fashion, that statement under section 132(4), unless there is some corroborative material found, now would not have evidentiary value. Now, with that, with utmost respect and humility, I may have a different take. The second thing, now, which was again held in the Delhi High Court's decision, as all of us know, we have got Kabul Chawla. In Bombay, you have got Continental Warehouse, you have got Al Cargo Special Bench, in which it was held by the court that concluded assessments now cannot be disturbed in 153 unless there is incriminating material found as a result of such. Therefore, the question arose in the context of the statement under section 132(4), now whether this statement can be said to be incriminating material found as a result of such, or this statement may be incriminating is obtained during the course of such. That kind of a distinction was made by the Delhi High Court on more than one occasion. This is the second occasion. I remember in one earlier decision, Honorable Delhi High Court has said that statement recorded under section 132(4) may be incriminating but cannot be said to be found during the course of such. And therefore, since it is obtained during the course of such, and therefore it cannot be said to be found during the course of such, and therefore the ratio of continental and ratio of Kabul Chavla would apply. Now, with utmost respect and humility, I would say that making this distinction of obtaining and found, first of all, now incriminating material found as a result of such is nowhere in the section. It was in the or by way of interpretation of section 153A, more particularly its first proviso. And then to interpret that incriminating material found vis-a-vis to incriminating material obtained, and then on that basis to say that even if the statement recorded under section 132(4) is incriminating, then it cannot be said to be incriminating material found as a result of such. To my mind, even as an author, we have expressed our reservations in our book. So this second proposition, which has been laid down in this decision, Ananda Kumar Jain, now is something which I wanted to highlight. I am conscious that I am speaking maybe before 40 of my friends, but then each one of you, I am conscious. I have given several lectures in this forum, on this forum, and each one of you I know, I mean, is far more learned, having far larger wisdom than me, and therefore objective is not to share the decisions as such simpliciter, but then I mean to make some analysis, maybe critical analysis. I mean, that is what I am trying to do. The third proposition which has been laid down in this decision is that since this was the statement not recorded in the search of the SSE, but recorded in the search of that entry provider or accommodation entry provider, and therefore that statement, if at all, can be said to be incriminating and was likely or was to be used against this SSE Ananda Kumar Jain, then the process, the procedure, the conditions, the conditionalities of section 153C ought to have been followed. Now, what does it mean? Delhi High Court has said we'll also argue while arguing the cases on behalf of the taxpayers, but then now 153A assessment of this SSE is already on as a result of the search taken place on this SSE. Accommodation entry provider which has got connection, linkage, relationship with this person as per the case of the department. Now his statement implicates and incriminates this SSE. Both assessments are on, and if the assessing officer of that person now sends that statement to the assessing officer Anand Kumar Jain, but of course natural justice also I mean should have been observed. I'm presuming, because nothing is coming out, copy must have been given to the SSE. Opportunity of cross-examining either was not demanded, or if demanded, may have been allowed by the assessing officer of Anand Kumar Jain. But then to say that unless process of 153C is not observed, that statement is alien to the assessment of Anand Kumar Jain is something which, again, I would say with utmost humility, is too wide a proposition laid down by the High Court. I remember there was one case of the name of that case I am forgetting. It probably was if it was starting the name Ajit, and it was given in the context of 158 BC and BD. there the question was that some statement was recorded in case of survey. Some material was found in case of survey. Survey and search on the SSE and survey on the third person were conducted simultaneously. The question arose whether that material found in survey can be passed on by the assessing officer of the surveyed person to the assessing officer of the searched person, or whether 158 BD's jurisdictional requirements will have to be complied with. Supreme Court reversed that decision rendered up till the stage of the High Court by saying, no, that kind of a process, though is known to the law, but then even if it is not observed, that will not vitiate the importance of the evidentiary value of those material found during the course of survey. So that decision of the Supreme Court was not pressed in this case, in Anand Kumar Jain's case, and therefore to what extent, in case the revenue has sought to challenge it with High Court before the Supreme Court, now would stand. So these three propositions which have come out in this decision of Anand Kumar Jain from the Delhi High Court. Now I as an individual, or I as an author with my partner Dr. Raj, now have got our own reservations, but since these are all three propositions which are very important, I thought that I must discuss and deal. So
now, what did you say about this Ajit's judgment, sir? So there was a survey at third party.
Yes.
So even if that material is forwarded to such person.
Yes, even without observing the conditionality of section 158 BD, because if you remember in 158 BD also the courts had said in Calcutta NITVF that satisfaction has to be recorded.
Okay.
So the SSE took the plea that those documents cannot be passed on to the assessing officer, searched person just like that.
Okay. And see, one again, sir, this obtaining and found,
Yes.
that was not.
That was not.
That distinction means, if you can elaborate, sir.
Yes, yes. So, statement is obtained during the course of search under section 132(4).
Yeah.
And in Kabul Chawla or Continental Warehousing, the courts interpreted the law of section 153A that additions or disallowances can be made with reference to the incriminating material found as a result of search.
Right.
Now, obtaining can be said to be equivalent to the found. That is the question.
Okay.
Sir, Prakash on this side, sir. I can observe that your main reason to say about the section 132(4) is that because 132(4) the statement is recorded on the oath, and in the survey this type of oath is not there.
Yes.
So, if the statement of recorded is the statement is recorded on the oath under 132(4).
Yes.
And this statement is obtained during the search here.
Yes.
Whereas the necessity of testing this statement with the incriminating material, whether the testing with the incriminating material is a prerequisite with this, as discussed in the Anand Kumar Jain, sir?
Yes, that is what I said. I think I and you probably are on the same page. I was thinking you are seeking to observe with respect to the first proposition that in the absence of any corroborative material, whether the statement recorded under section 132(4) can be said to be having the evidentiary value or not. Hello?
And you said it has got evidentiary value
because sir, that subsection 4 is open before me. It says, I will read it. The authorized officer may, during the course of search or seizure, examine on oath any person who is found to be in possession or control of any books of account, documents, money, bullion, jewelry, valuable article or thing, and any statement made by such person during such examination may thereafter be used in evidence in any proceeding under the Indian Income Tax Act. Therefore, to say that unless there is some corroborative material found in support of the deposition made on oath in the statement recorded in the section 132(4), I mean, that cannot be used as evidence is something, I mean, which with utmost respect and humility, I would say, defies at least my logic.
So you want to say
Yes.
132(4) is an independent evidence deholds the incriminating material.
Yes. Most of the times what happens, Prakash, that the person who gives a statement, most of the times, under 132(4) controverts that statement, retracts that statement, and therefore whether that statement or oath in itself can be said to be an evidence, that is called in question. If that statement is not retracted, many times it so happens also. Even in respect of such statements, if interpretation is given, that unless there is some corroborative material in support of this statement, till that statement cannot be used as an evidence, I am very slow to buy this kind of explanation or interpretation.
Okay.
Sir, Mahendra Sanghvi here.
Yes, sir. Yes, sir.
Just to take a support from what you were saying,
yes, sir.
Your conclusion, that earlier also we had many decisions wherein for any reason, after the statement is recorded and ultimately by way of a writ, it has been held that the search action was illegal. Still the statement recorded can be used for the assessment purpose, for these scrutiny assessments and all that. So there also, though the statement ultimately recorded in the search proceedings, which is held to be illegal, still the statement has been used.
Yes.
And the courts have said that yes.
Yes, because if you remember in 93 ITR 555 in Puranmal's case, Honorable Supreme Court said this thing, that search may be held illegal, but then the evidence collected during the course of search nonetheless carry the evidentiary value. And wherever the proceedings can be undertaken based upon those evidences, under the Income Tax Act, under some other provisions can be taken.
That's precise I'm supporting,
yes. Yes, sir. Yes, sir. Yes.
But, sir, why do you not agree with the judgment of Continental El Cargo to say that there are...
I'm not saying I do not agree. I'm not saying, because I'm going to contest it in Supreme Court.
The ratio laid down, because you disagreed, the ratio laid down in Anand, Kumar and what now is the same as far as El Cargo, Anand Kumar.
What I said, probably I may not be very vocal in my saying. What did I say? That to say that the statement recorded under 132(4) is obtained, not found during the course of search, and therefore, as per Continental's decision or as per Kabul Chawla, now since this is not incriminating evidence found as a result of search, and therefore it should be excluded. Based upon this, addition cannot be made in such assessment. Included.
Sir, not on this point. Not on this point. On the point that if the assessments which has already been completed, and if there is no incriminated documents found, on that point, sir, is it that you agree with El Cargo or you do not agree?
No, I agree. I agree. In fact, our take in our book is also only to this extent, that those limitations which are there in case of reassessment, that would apply. Otherwise, if you see, sir, that proviso, first proviso, which say that as on the date of search, pending proceedings shall abate. Now, the simple purpose of that proviso was that there should not be any multiplications of the proceedings, because when the search has taken place, 6 years notices will be issued invariably, and if some assessment is pending, now therefore that pending should abate. The purpose was only this thing. But then the courts were persuaded to interpret it like this, that those assessments now which have attained finality and which have not attained finality. So first proviso was interpreted in this manner, and with that interpretations went well with the courts. Though our reading of that first proviso was that it was very simply given proviso for the purpose of avoiding the multiplicity of proceedings for one and the same year. But then, of course, that limitation which is there under section 147 as read out by the courts, now that will have to be read. Otherwise, there will never be finality of an assessment. Finality of an assessment is the principle which has got sacrosanct impact and which is sacrosanct. Therefore, the finality of an assessment should not be disturbed unless there is some incriminating material. But then I was on this issue, whether obtained or found now can be equated or can be said to be divorced to each other.
Okay, sir.
Yes, the next decision I like to take again from Delhi High Court, but then since it has got very wide and important ramifications for similarly placed cases. Though I always say whether a credit is genuine or not is a question of fact, it is not a question of law. But then if the facts in one case identically met with the facts of the other case, then why should the ratio of one decision, maybe of fact, be not applied to the case which contains or consists the identical fact? So I am referring to the decision of Krishna Devi, penny stock. Somebody suggested me, Prakash, only 3-4 days back, sir, you write on 148 poems, Hindi poems. Why don't you write one satirical poem on penny stock? So I'm in the midst of writing something even on penny stock. I mean, in my Hindi poetry. But anyway, that is beside the point. Krishna Devi. In this case, it was an ex parte decision from the Delhi High Court. And even if it was ex parte decision, but then it was a gift from their lordships to that SSE. Their lordships said very important propositions were laid down. Their lordships held in this case that even if the share prices have gone up by 4,896.8 times, kindly remember, 4,896.8 times, then also it can well be said to have triggered the suspicion, but then not beyond that. That ought to have put assessing officer into the mode of conducting inquiry, and this circumstance in itself cannot be pressed against an SSE to decide this issue once for all against the SSE. And then another proposition which was laid down in this decision was, and you all must have seen the department very often pressing Durga Prasad More and Sumati Dayal. So their lordships in this decision held that the decision of Supreme Court in Sumati Dayal now cannot be pressed, cannot be invoked, cannot be applied, and cannot put blink to the evidences which are there on record. Meaning thereby that if the tussle, the fight, the contest is between the evidences on record and the human conduct and the preponderance of probabilities, then the hardcore evidences which are there on record now should take precedence over this indirect evidence, human conduct or preponderance of probability. This is very important proposition laid down in this decision. And thereby, Honorable High Court dismissed the appeal of the department. SSE won in the tribunal, and then the lordship said that at the end of the day, it was appreciation of evidence by the tribunal, giving no rise to the question of law. Evidences were appreciated in the right earnest and right context, and therefore there was no substantial question of law. Because you may well be aware that even in the matter of facts, if certain important evidences, not important but relevant evidences have not been considered, or some irrelevant evidences come to be considered, then even if the question of fact becomes the question of law. That is what, therefore, whenever such kind of cases are challenged, either by the SSE or by the department before the High Court, trying to raise it as a substantial question of law, they try to say, sir, in this case, the finding of the tribunal has been arrived at by considering certain irrelevant material or by ignoring certain relevant material. that material may be, because the courts have said that to what extent the irrelevant material has come to affect the mind of the court while arriving at the ultimate decisions cannot be ascertained. And therefore, the courts have said that there is a question of law or substantial question of law which arises. So this decision now is under challenge before the Supreme Court. And it appears to be that the fate of this decision, I mean, may be short-lived. But then, unless it is upturned, unless it is set at naught, unless we are back to the square one, till then, the benefit of this decision of the Delhi High Court by my Lord Justice Narula, writing on behalf of the court, now is very good decision. Because I remember, I have also pressed this kind of an argument before the High Court in a couple of cases. And it is settled law, right from 37 ITR, I remember, 1337 ITR, Umacharan Shaw's case. That suspicion, howsoever big, cannot partake the character of evidence. So, that is what Honorable Delhi High Court said, even if the prices have shot up to astronomical 4,896.8 times, suspicion is very big, but then that cannot partake the character of evidence. That is what the purport of this decision. So, any take, any observation, any question?
Yes, sir. We have seen, sir, in the case of the penny stock, department, without controverting the submission submitted by the SSC, without appreciating the submissions or the evidences submitted by the SSC, directly jumps into the Sumati Dayal matter and finds that it is a preponderance of the probability, saying that this of the price should not be there, and they apply their own mind that what should be the price here without going into, and they are trying to touch that what should be the market and what should be the gain into this specific. My submission is that, what I can say, that the preponderance of the probability should be the last resort, not the first resort here. And in many cases, sir, I have seen that in the case of particularly 68 matter also, they are disregarding the fact and the evidences submitted by the SSC and directly jumping into the preponderance of the probability and applying the Sumati Dayal directly without controverting or without appreciating the fact, without any, and without discussing the fact. They have not discussed. And after that, they have started their own paragraph and own chart of the price momentum and the price gain into this part here.
So you are right. Now I'll explain this in this manner, which may be found practical also. Now there is a credit. The burden is on you. Initial onus is on you to explain the genuineness of the credit, nature and source. There may be positive evidences with you. Those evidences may be the direct documentary and circumstantial evidence. You press them. If those evidences are trashed or negatived by the department by leading the counter evidences, the weight of which is higher, then obviously your evidences now will not be considered, or after considered they are liable to be rejected. There may be second situation that you have given those evidences have not been trashed. Now the department has got circumstantial evidence, human probability. Then the ratio of Krishna Devi and similarly placed decisions now can be pressed that when direct and documentary evidences are pitted against the circumstantial evidence, then obviously the direct and documentary evidences, because they are not traced, now must be allowed to take precedence over the circumstantial evidence. The third situation can be that department also brings some evidence on record. But as you said, the department does not observe the principle of natural justice. They are not supplied to you. You ask for the cross examinations, it is not allowed. Then in that situation, the way to argue should be, sir, as per Andaman Timbers, as per Kishni Chand Chelaram, as per so many decisions, Now, first of all, kindly exclude these evidences, so-called evidences, from the consideration. Because they cannot be said to be evidence, because they have not been tested on the touchstone of cross-examination. Therefore, they should be excluded. Now, once you exclude them, then what remains on the file? My direct and documentary evidence and department's circumstantial evidence. And now you as a court kindly weigh them. So this should be the approach, and that is how we argue. That is how we argue. But definitely you are right that those evidences which the department says that it is in its possession, some SEBI report, some investigation report, some statements of some adventurous deponents. Now, if the department chooses to keep them close to its chest, then let it remain there. But then that will not become part of the evidence. Okay, Prakash?
Yes, sir.
Yes.
Thank you, sir.
Yes. Now the next decision is.
Sir, you said two things. When
Yes,
it becomes question of law, one
Yes.
you said evidence not considered.
Yeah,
And
relevant evidence.
Yeah.
Ah.
And second,
When the irrelevant evidence has been considered.
yeah.
Sir, these things was discussed in the Chunilal Mehta case thoroughly.
Okay.
And thus it was it is the case of the perversity. And the perversity is the good question of law in substantial question. It is a substantial question of law under section 260A, sir.
Yes.
Or section 100 CPC.
Yes. Very right.
Right, sir.
Now the next decision, again, very interesting decision. I am holding myself from terming it as debatable decision, is Sanjay Duggal. And there is a spate of decisions coming from the tribunal. And you had got in your own tribunal Mumbai benches Srilekha Damani, which ultimately found approval from the Bombay High Court also. But then we'll discuss on the principle. It is in the context of as to what is the valid approval under section 153D. Because under section 153D, if you remember, that no assessment in case of search or in case of 153C shall be passed unless it has been approved by the Joint Commissioner. Now the question comes, and of course the law is that whenever there is an approval, then that approval should not be merely ritualistic approval. It should not be mere an eyewash. It should not merely be a pretense. It should not merely be mechanical. It should not be bereft of application of mind. And that position is settled. But then, in the setting of this law, whether the facts of a given case would meet all these things or not, that is something which the courts have to see. I have seen some decisions that 8 or 10 matters were sent to Joint Commissioner on the same day. How could he have applied his mind? I mean, if it can be demonstrated that assessing officer was in dialogue, was in consultation, was in discussion with the Joint Commissioner from time to time, then why not 10 files sent on the last day for approval cannot be said to have been approved with due application of mind? After all, but then it is a question of fact whether in a particular factual matrix the mind of that competent authority has been applied or not. That, of course, the courts will have to adjudicate upon. But then what was the motive or purpose of section 153D? That has been spelled out very nicely in 153D. They said the objective is very laudable, and the objective is to monitor on the part of the Joint Commissioner to monitor the progress of the inquiry and investigation so that the revenue's legitimate interest is not whitewashed or is ignored by the assessing officer. And at the same time, the assessment of an SSE may not be made in an atrocious manner by the assessing officer. Therefore, this twin objective was the philosophy behind the enactment of Section 153D. And court in the case of Sanjay Duggal found that this was not achieved because the courts have said neither appraisal report was available to the Joint Commissioner, nor the seized material was available to the Joint Commissioner, nor the files have gone to the assessing officer for the Joint Commissioner. And the way it has been done, that inspired confidence in the mind of the tribunal to this extent that due application of mind was lacking. And therefore, the court said that 153D approval, now in that case, was given in a very ritualistic, as a formality and as a necessary compliance of a statutory condition rather than in true letter and spirit of Section 153D. And therefore, the court said that it cannot be said to be in accordance with law. Yes, anything?
Sir, this is the same thing is happening. This is the same thing is happening on the 148A, sir.
तुमने दुखती रग पर हाथ
भी है केस
तुमने दुखती रग पर हाथ रख दिया हमारा 148A. Now really I tell you, and our Delhi High Court is not showing indulgence in the writ. I do not know, but then the way this 148 has been reduced to, I mean, a proceeding in futility, now is something, I mean, which gives a lot of pain. And my last Hindi poem on 148A in the form of conversation between a taxpayer and the notice under Section 148A now has got, I mean, wide media coverage. But that be that as it may, higher authorities which ought to see as to what is happening, because 148A(b) notice is being issued with the prior approval specified authority. Clause D order of 148A now is being passed with prior approval of the chief with specified and kindly say specified authority are the authority of very higher rank. Principal Chief Commissioner, Principal Commissioner. So, despite the intervention of such kind of specified authorities, if this is the hashra, if this is the fate or this is the destiny of 148A, now, I mean, it's quite painful. Now, very laudable objective that the GK and drive shaft is legislated in the form of 148A. Now, the way it is being mocked now is something, I mean, which can be debated for hours. Yes.
Yes, you are right, sir. It is happening here also the same way.
Yes.
So many, yeah.
The next decision is a Madras High Court in Shriram Ownership Trust. Is a Madras High Court decision 430 ITR 356, and it's very important decision which has got very important implications. Now, in case of the private discretionary trusts, there is always a question as to whether and as to what is the status of the private discretionary trust. And the status of the private discretionary trust is very important for so many things. It may be relevant for the purpose of the trust availing a particular exemption under section, say under section 54. So this question, and under section 56, if you remember, there is subsection 2 clause 7. Now, which says if an individual or an HUF receives any money or gift in the form of money or immovable property without consideration, that will constitute taxable income beyond a particular threshold. So the issue was that now we have got 56 subsection 2 clause 10, which does not make any distinction between the various categories of persons. But till 2017, there was individual and HUF alone who could be taxed. Therefore, the question was that if the gifts are received by private discretionary trust, now can it be said or can it be brought within the scope of section 56(2)(7)? The court held in this decision that even if there are several beneficiaries or trustees, the status of private discretionary trust will be that of individual. Honorable Court even went to this extent to say that even if the beneficiary is a non-human being, then also the status of that private discretionary trust will be that of an individual. And therefore, the receipt of gift beyond the threshold limit as is there under section 56(2)(7) by a private discretionary trust, irrespective of its composition, now will be treated to be received by an individual, and therefore the rigor of section 56(2)(7) would apply. Now we have got now 56(2)(10), but then this interpretation is placed by Madras High Court now can be, because this has always been very contentious issue. Now in case of the specific trust, of course, since the income is to be taxed in the hands of the specific beneficiary, and that beneficiary's status ke hisab se, the taxation would be there. But in case of private discretionary trust, it always used to throw challenge. And the last decision is the decision which has been rendered by Honorable Supreme Court on 5th of April 2022, Mahagun Realtors Private Limited. Now this hard-earned decision, because I myself was the party before tribunal, I argued this matter. Before the High Court, I argued this matter. But then Supreme Court upturned that decision, but on its own facts. And this is a second decision now which has been rendered by Honorable Supreme Court, and there is simultaneous amendment by Finance Act 2022. And very surprisingly, in Finance Bill 2022 in memorandum, in respect of several other amendments, case laws have been cited which were in the mind of the legislature, and the effect of which was to be set at naught. But amendment proposed in section 170 was there to nullify the important impact of the decision of the Supreme Court in Maruti Suzuki. But then in memorandum there was no whisper that all these decisions were in the mind of the legislature while enacting this proposed amendment. But anyway, the amendment has also been made in the Finance Act, and now this decision has also come in Mahagun Realtors. In Mahagun Realtors, Supreme Court referred section 170, though this section has been referred even in Maruti Suzuki or Saraswati Industrial Syndicate's decision, to say that the successor is responsible for all the liabilities in case of amalgamation. Then Honorable Supreme Court said that amalgamation does not bring the death of the corporate in that sense, which can be said to happen in case of the dissolution of that company. Then Honorable Supreme Court said that the SSE itself has represented before the tax authorities post amalgamation in its pre-existing form, or in the form of, or as an amalgamating company it has given its name. Even in the return, when there was information sought in connection with amalgamation, it has written NA, not applicable. Then certain documents were provided by the SSE before the Supreme Court as Mahagun Realtors Private Limited, not as Mahagun India Private, Mahagun India Limited. The assessment order was mentioning Mahagun India Realtors Limited, represented by or through Mahagun MRPL, Mahagun India Private Limited. So, having regard to the cumulative facts, the Supreme Court held on its own facts that SSE did not inform the departmental authorities about the amalgamation, and therefore represented itself in the amalgamating company's form, and therefore to say that and in the amalgamation order also, the Supreme Court referred section 394 subsection 2 of the Companies Act to say that the amalgamation scheme also says that all the liabilities of the amalgamating company now will be taken over by amalgamated company, and therefore the Supreme Court said that non-informing the departmental authorities about the amalgamation now will come as an obstacle in the way of upholding the decision of the Delhi High Court in the case of Mahagun Realtors Private Limited, and thereby Honorable Supreme Court has reversed this decision. So friends, now with this, I think almost 2 hours have gone. If there are certain observations which have to be made by any of you, my friends, then so thank you from my side, from the core of my heart. I thank Sharma Sahab, I thank Dipeshji, I thank each one of you. Thank you.
So the Supreme Court says in the case of amalgamating company, assessment can be made.
Yes, in the case, if the amalgamating company or amalgamated company have not informed. Yes.
But what about the dead person, sir? There is a view that.
Very good question, because the Delhi High Court in a series of decisions of late now has said that even if the legal heir has not informed about the death of an SSE, then also the assessment or the initiation of the reassessment procedure cannot be made. Now all those decisions now will have to be or similarly placed decisions, whenever they will come in future, now will be tested on the anvil of this decision, and then the department would say, but then it can be argued on behalf of the taxpayer that the Honorable Supreme Court made a distinction in case of Mahagun Realtors between those situations where the amalgamation has taken place and where the dissolution of the company has taken place. So death of a person is equivalent to the dissolution of a company, in the sense that as in the case of dissolution, the company dies. In case of the natural death of the human being, the human dies. Therefore, this case can be yes, distinguished on that score.
Right, sir.
And
Anybody has got any question?
And this case was on the peculiar facts. This case was on the peculiar facts where because the SSE has not informed here in this case here.
No, I would, because since I have argued this before the tribunal and the High Court, Prakash, I can say no, this is not correct, because when the survey took place and the search took place, the statement of the director was made. I do remember very vividly. I read it out in the tribunal. In that statement, that director said that these companies have now been merged into this Mahagun India Private Limited. I do not know on what basis Supreme Court has said that the SSE has not informed. There is no any prescribed method by which the department has to be intimated. Now, prior to the search, the statement on oath was recorded in case of search, and the director has said about the amalgamation. Now, what else remains?
Here in this case, sir, here in the order of Supreme Court,
yes,
the Supreme Court has said that the director has informed,
yes,
but for the assessment year 2007-8, not for the 2006-7, sir.
No, if the director has informed about the amalgamation, then how can it be said is for 6-7 is not, for 7-8 it is?
Because I was reading the judgment, sir.
I also read, but with utmost respect, I would say, now if that statement is read, now he has said it has been amalgamated, then that information has been given to the assessing officer. Then it was for the assessing officer to have obtained everything. And in any case, in amalgamation proceeding, department itself is a party before the court.
Yes, sir. So what will happen, sir? Because this argument was not brought by the SSC that when the High Court has allowed the amalgamation, the department was one of the parties.
Yes, it was not argued. Maybe they may come up for review, but then review has got very limited scope before the Supreme Court or before, for that matter, any court.
Yes, sir. Yes, sir.
One of the issues you raised was that when a person dies, still if the officer is not informed of the death of the SSC, the department can still tax that person.
No, I have not said. I have not said.
You did say this was one of the discussions.
Yes.
But now, in the past few years, whenever a person dies, his legal heir has to register himself on the tax portal by giving the death certificate and mentioning his own PAN number. So that is constructive intimation of the death of the SSC, and therefore there can be no occasion for the assessing officer to tax the deceased person.
And there can be variations that legal heir may not have, updated all these things, and yet the notices come in the name of the deceased person, and then the assessment is made. So you are right that they are supposed to update it on the portal, but then there may well be the other kind of situations also.
That's right, but this is a constructive information given to the department.
In that case, of course, it is a constructive information.